Hi, welcome back to the second installment of my very short video newsletter series. This series is designed to share useful information about money and how money really works that your bank and other service providers just simply do not want you to know. Today, I'm going to share with you the true cost of paying monthly versus annual for a myriad of regular payments you make for subscriptions or other ongoing or perpetual payments. You see, most providers want or assume funds are paid upfront annually. And when you pay them monthly or biweekly, you are actually lent the money for the annual payment and pay it back over 12 months, which is actually 11 months, which you'll see in a minute when I run through some calculations. So to take a closer look, let's look at a quick interest rate calculator. But first, before I get into that one, I'm going to show you how the calculation works. So I'm going to share a very simple calculator. I'm going to show you an example here. Let's say that you have an annual car insurance for your family of $3,000. So $3,000, and they charge an 8% interest rate factor on that. So it's plus 8%, which is $3,242. And what does that mean monthly? Well, we divide that by 12, and it's 270. So we got to keep that number. We'll copy that. And now I'm going to change my share over to the interest rate calculator and have a look from there. So when we go over there, we put in the payment of $270, but we're going to show a loan of $3,000. Okay, and future value is 0. The number of months is 12. So as you can see here, so this interest rate factor of 8%, because of how they do it, they calculate it up front and add it on. It actually works out to 17.18% return or interest rate. Why? Because you are paying all the 8% up front, and then the 270 is a monthly payment that starts actually at the beginning of the month, and that's where I get you're paying it over 11 months because you're paying it up front, almost like a lease payment, and you pay your 12th payment on the 11th month. So when you factor all those things in, you end up with a 17% interest rate cost. And some providers actually do this at a more reduced rate of, say, 4%, and those would be, I'll do a quick one off the top of my head because I know the numbers on that. Let's say negative $10,000 and $867 a month. Oops, 867. That would be a 4% interest rate factor added on, and of course over 12 months that works out to almost 9%. So even though it says, oh, the interest rate factor is cheap, it's only 4%, it's really 9%. In today's world of cost of money, these things are way overcharged. I'll give you another example of a subscription I just did from a business a couple weeks ago. So they offered me to pay it annually, or they pay it annually at $144, as they advertise it as $12 a month if you pay it annually, so $144. But if you pay it monthly, it's $15 a month. And what does that work out to? A 52% annual interest rate. So obviously these numbers are fairly small, but you get the idea that a lot of these things that are built around telling you that you can pay annually or monthly, there is a cost. And this cost is usually quite hidden in that, like I say, they say 8%, you say, oh, 8% isn't too bad, or 4% isn't too bad. But when you start figuring out the actual cost, because you're paying it all up front and then gradually paying it down over the course of the year. So that's how the higher interest rate gets calculated. So any questions on this or anything about money? I have an endless supply of ways that money works that are not necessarily public knowledge, because banks and, as like I say, other providers just don't want you to know. So I'm going to reshare this screen here, which is my contact information down below. We're on Brownlow Avenue, but you can reach me at my email, scott@scottgannon.com, or my direct mobile number is 902-478-2620. And yeah, please give me a holler. I'd love to see if I can be a lifestyle enhancer for you. Thanks.